Good morning. This is your July 11th stock market update with Cynthia Fick. And first off, I want to say thank you so much to Nancy Hetrick for covering for us for the last couple of weeks. I got to finally take that 10-day European tour with my family. It had been rescheduled 3 times. And we got back in the office last week. And Gina, while I was gone, had her baby. And she is working remotely, but we'll be back in the office probably around September 1st. Very healthy baby boy, and we'll be sending out some information and some pictures too. So she's doing really, really well. I watched Nancy's stock market update, and I just want to say I disagree with Nancy just a little bit in that I don't think we're in a recession. We had some numbers come out on Friday, and they were super positive on the job market. And that, to me, although the economy is slowing, which is what we wanted it to do, I don't think that portends that we're going to have a recession. And there are 2 major indices that track recessionary fears. And the first one is Bloomberg. And they look at all kinds of financial markets and money supply and things like that. They've been around since the 1990s and have predicted 3 of our last recessions. And right now they're projecting 0% chance of recession. Not saying there won't be one, but I don't think it's going to happen this year. It may happen on into 2023. But we'll be watching for that. What I think is happening right now is just a normal mid-cycle slow up. And that is not a bad thing. The economy, they were trying to generate the economy, pump a lot of money into our money supply. All of a sudden it got overheated. They needed to start raising interest rates, and so it's working, and the economy is slowing down, and we see it evidenced by commodity prices are coming down. I think inflation has peaked. There's all kinds of things. Core CPI for the last 2 months has been lower. Just a lot of things are changing right now. Industrial prices are coming down. So all these things are saying what the Federal Reserve has been doing is working. And as long as they're paying attention and listening, we should be okay, because we may have another 50 to 75 basis point increase in the Fed funds rate. And at that point, I'd say they've done their job. What the market doesn't like right now is that fear of inflation and that uncertainty. They're going ahead and pricing that right in. And in fact, they're pricing in a really bad recession, which I don't see happening at all. But what's happening, again, the market is doing its little trade sideways thing that we've been talking about for a long time. Might happen through the summer, generally a slower time in the stock market anyway. And once some inflationary numbers start coming out and showing that inflation has peaked, we may see some big increases in the stock market. And that's what I'm seeing today. If something changes, I will let you know. But we may be hovering over time where, could be one of the greatest stock buying opportunities in our lifetimes. I'm patiently waiting until the market shows us it really, really wants to go up. But that's where I'm at right now. I'll let you know if something changes. Be patient. Understand we may trade sideways. I don't like that this is the worst half of the stock market since 1970s. That was a big headline from Jim Cramer this morning. It's the worst half in the stock market since the 1970s. Everybody is so negative. Inflation has just put such a fear and a blanket of uncertainty over everything in the market and in our society. And I think that's going to lift. It's actually good for the stock market. And so that's where we're at right now. Let's hang in there and be patient, because I do think this too shall pass. So, Cynthia Fick, Financial Life Planners, and I hope you have a great week. Talk to you next Monday. Bye.